This is 95.3 Business Now.
Welcome back, everyone. Nigeria's battered currency could be in line for a sharp rebound before the end of the year, as analysts now see a sharp rebound of the Naira against the US dollar before the end of 2024. Analysts at top major investment bank Goldman Sachs, Citi Group, and StanChart forecast late last week that the Naira would rise by as much as 25% against the American greenback this year, as jumbo interest rate increases by the Central Bank of Nigeria and other steps to attract foreign capital are starting to yield results. Emmanuel Odiaka is the Chief Executive Officer of Eco Capital Limited, and he joins me now for a conversation on this. We thank you for connecting in on the show this Tuesday morning, sir. We appreciate it.
Thank you for having me.
All right, you're welcome, sir. So let's begin the conversation. Are you in tune with the top investment banking companies? We have StanChart, Goldman Sachs, Citi forecast that the Naira would see 25% rebound this year.
Yes, certainly. We have known all this while, following the surge in currency exchange to the greenback, that the Naira was undervalued, because what we have seen as speculative trading and speculative attack on the currency following the liberalization of the currency. We have also in-house used our rare and purchasing power parity models to analyze price indexes and see that the Naira actually is undervalued to the tune of between 25 to 35%. Under our purchasing power parity model, the Naira should actually be trading within 900 to 950. And under rare model, the Naira should be trading possibly within 985 to 1,000. So yes, the positions of Goldman Sachs, JP Morgan, and Citibank are in tune with fundamentals when looking at our recent export surge and the reforms that have been carried out by the central bank authorities.
Speaking of CBN, what's your assessment of CBN moves in the foreign exchange market? Are the reforms enough to restore confidence in the Naira?
Yes, the CBN, the Apex Bank, has started well. We have had a lag in policy actions, especially the monetary policy rate being effective in the last couple of months. However, with the new change in the Apex Bank head, we have seen them come truly out in the market to rebound some confidence. Why we said there was a lag was that it took Governor Yemi Cardoso some months to appear in his maiden monetary policy meeting. Of course, yes, there was a 400 basis point rate increase in monetary policy rate. We also saw an increase in cash reserve ratio. However, there was a lag and there was a backlog of payments that needs to be cleared, which they are convincingly doing at the moment. And with the surge in interest rates moving to at about 27.3% effective yield on 1-year Treasury bills, that also has garnered interest to foreign portfolio investors to come back into the Nigerian fixed income space. Yes, so those policies are working out, but it's not enough. It's not just only the tune of the monetary policy authorities. We must also see some changes in the fiscal authorities. I'm talking about fiscal authorities. We have to see some conservative means. We have to see also a cutback in cost of governance. The Nigerian people also want to see effectively a change in attitude of our politicians. I'm talking recently about the issues concerning the budget. You could see that those are deflating sentiments to the Nigerian people. But however, the monetary authorities are moving in the right direction.
So what signaling should the market expect as a further direction on the FX markets at the next CBN MPC meeting?
Well, according to the Apex Bank and the Monetary Policy Committee, they have already signaled inflation targeting. And we have seen inflation surge recently from the last February reading to 31.7%. If the CBN goes by their guidance, it does mean that we might see a shift in monetary policy rate. going into the next monetary policy meeting. That is what market is keen on. There was a bond auction yesterday with the 10 years paper being printed way above where market estimate was, 20.45%. That's an unprecedented level. We also saw a new issue, the 2027 3 years tenor being printed at 19.94%. So these are new levels that are, taking markets into uncharted territory. We have also seen that the Apex Bank has been very effective in using its orthodox monetary policy instruments in tightening monetary policies. So yes, this government, we are seeing signs, and market sentiment is very positive that the Apex Bank is moving in the right direction.
All right, Emmanuel Odiaka, Chief Executive Officer at ECOP Capital Limited. We appreciate your time on the show and have a profitable week.
Thank you for having me. Bye.
I am Aramide Florisho, and that's your business now for today, Tuesday, the 19th of March. Do have a great day ahead, everyone. It's bye for now.
This is 95.3 Business Now.